Hey guys, welcome back to the channel. Today is all about hard money, aka private money. So we're going to dive into how we use it. I'm going to dive into what it is, and then I'm going to give you some real life examples of some hard numbers. They'll pop up on the screen, as well as in the comments, you can use our hard money calculator to see exactly how much your lender is going to charge on your project, depending on your rates. So let's dive into what is hard money. Well, hard money is a fancy word for a private flexible loan that has different rules depending on who you decide to use as your hard money lender. But the hard part, the hard money part, is relating to is correlating to a tangible hard asset. That's all it means. Is the loan is backed by a hard physical asset, aka the real estate that you are flipping or rehabbing. Okay, so that is essentially all that term means. And there's tons of advantages for hard money, private money. They're flexible, and I'll explain what I mean by flexible. Is they don't play by the same rules as a conventional loan, right? So when you go get a conventional loan, you have to submit W-2s, right? Pay stubs, your 1099s, maybe tax returns, the whole nine yards, right? And then it goes to underwriting, and then they come back and say they need more stuff, and then they need to see bank statements. That's not necessarily how hard money works. Now, when you first establish a relationship with a hard money lender or private money, same thing, they would maybe require this. All right, they want to make sure you're in good financial standing, to make sure they're not lending out to someone who's having thrown this is their Hail Mary. So at the very beginning, you may have to submit some things and prove to your lender that you're not in distress. But after that, going forward, the process for us has been very smooth. And so let me give you an example of what I mean by flexible. So now that we have a relationship established with a couple hard money lenders, we can receive a deal like at a dinner. This has happened before, where a wholesaler will send us a deal and say, hey, I need $175,000 to lock this property up. I think it's a great flip. Want to give you first dibs, but if not, let me know ASAP. I'm going to send it to someone else. So we plug it in our little calculator right there on our phone, like you'll see in the comments. We plug it in. We make sure we believe the ARV is correct after rehab value, and then we'll send that to the hard money lender. Sometimes just in a text, and it's like, hey, here's the address, here's the numbers, here's the comps. Are you good with us taking that down? That's our loan approval process. He'll text us back or email us back and say, hey, yep, that's good. Or, hey, call me on this. He might have a couple clarifying questions. He gives us a thumbs up. We go back to the wholesaler and say, hey, send us the contract signed. That can all take place in about 30 minutes, especially if you understand the market and you understand your rehab budget and you have that good relationship. So when I mean it's flexible, it's flexible. That's a huge advantage, because if you are going through a huge company or a different rehab loan process, that maybe could take days or weeks, and that wholesale deal is already gone. So when we say we buy it cash, we do buy cash. We just don't use our own cash. And that's one of the biggest misconceptions about people who come to us wanting to flip homes. Well, I want to flip the house, but I don't have $100,000 cash, let alone another $50,000 to cover the rehab budget. I mean, I'm never going to be able to get there. It's going to take me, I'm going to be 50 years old before I flip my first house. The good news is that's a myth. That's completely 99% of house rehab flippers out there are not using their own cash. That's the eventual goal, so you don't have to pay the interest cost. But you can leverage these hard money and private money lenders because they don't play by the same rules as your typical lender, right? They have this private money, usually their own or family members, or they have raised it through fundraising and capital, and they can use that money at their discretion. They are the underwriter. They are the end-all, be-all decision maker. So super flexible. And even so much for the terms are even flexible within reason, right? So they're going to have their standard terms, and I'm going to share what ours are. And now this is always changing because the Fed rates are hiked, and that affects everyone's pocketbooks. So things do change the same way interest rates change. But for argument's sake, I'm going to use some past examples of what I mean by flexible. So, and how that it is changing, and different lenders will get competitive and try and give you better deals to get more of your money and more of your business. So I wouldn't say pit them against each other, but it's also like anything else, shop around. Don't just go with the first hard money lender you talk to. Make sure you understand their processes, their fees, and here's some of ours. So our lender charges us what they call 12-in-1. You'll hear those terms. They'll be like, oh, well, we charge 13-in-1 or 14-in-2 or 12-in-3. What that means is there's just two different charges. is the 12%, the larger number, is the interest over time. So you're going to pay that 12%, 13, 14% interest over the lifetime of the loan, from the day you close on the property until the day you sell it or cash out, refinance that property. Okay. So what's really neat about that is you're only paying for the time you're using the money. You don't have to pay a set fee. The faster you get the project done, the faster the house sells, the less you pay in interest, because now that money is getting sent back to the hard money lender and he can rinse and repeat and reuse that money. The smaller number, 1, 2, or 3, that is called a loan origination fee. And that is going to be the 1% of the total loan that they are releasing to you at the day of closing. So it's as simple as that. We have those factors into our calculator. You can plug in, hey, here's my purchase price, here's my rehab budget, here's how many days I think from the day we close on it until the day it's going to sell or cash out refi, and then you'll see exactly what the lender is going to make or charge you per se. What's really neat about at least our lender, this isn't always the case, so check with them. And this is what I mean by flexible. This is where you can start to negotiate depending on how big the company that you work with is. If it's a private individual, or is it a big company with lots of employees that maybe have to be more strict. For us, we have two different options with our lender. And that is, we can get the money up front, all of the rehab budget up front. And this is what I would prefer. And so the day one, the $50,000 rehab budget goes into a bank account and we can spend willy-nilly. We can go to town, not have to worry about cash flow. We got everything covered, but we also start paying interest on that immediately. The other option with our other lender is he actually requires receipts and pictures to prove that we've done the work, so then he will then reimburse us. Now, the problem that creates is a cash flow issue, because now I'm having to front all the cash. The project we're working on right now is about $33,000 in material costs alone, plus the contractor's labor. So, and I have to float that money until I send pictures and the work is done. So if I buy the kitchen cabinets and buy the countertops, but it's not in and finished yet, I can't recoup that $10,000 I've spent on the kitchen so far. So you do have to have something, depending on your lender. That's why I'm saying make sure you understand their processes, right? I pay a little bit less to use this lender, but it is a little bit more of a headache because I'm not paying on that money until he draws it for me and sets it aside. So a couple different options, and I'm sure every single program is different because they are so flexible, and they are people's own programs that they've created based on how they want to run their lending business. So that's how we utilize their money. We send it, we use it, and I prefer getting it all up front, but some lenders have been burnt. Just to give you an idea of why lenders may do that, there are times where maybe a home flipper robs Peter to pay Paul. So maybe they have 3 or 4 projects going on at once, and they may take from this budget in order to pay for this budget because they're over here. I understand how that happens. Now, we've been lucky enough not have to do that. We keep everything separated. Every flip has its own account and own credit card associated with it, so there is no commingling, but that took us a while to figure out that process. Hard money, one of the best vehicles, if not the best vehicle, to radically accelerate your home flipping business, your real estate portfolio, because you can now leverage someone else's cash at a very, I would call reasonable, 12%. When you hear like, gosh, that's so high. But what's the alternative? Pass on the property? Would you rather make $25,000 and pay someone $5,000 in interest costs, or pass on an opportunity and wait another 10 years until you have all the cash to do it yourself? So it's just a cost of doing business. It's a line item. You factor it into your budget. You factor it into your rehab calculator, and you go on your merry way, and you rinse and repeat time and time again. You get better at what you do. So just to give you an example, I'm going to give you a rundown of some of our numbers. This is going to be very rough numbers, but we have a house right now that we bought for $167,000. Rehab budget is $62,000. It will take us 8 to 9 weeks to complete the rehab from start to finish. And assuming we get an offer within the first 2 weeks and a 30-day close, we'll be looking at paying around $9,000 in interest costs. That's give or take. Don't hold me to that. But that was the cost of doing business on this house, and we still should make $27,000 to $28,000 on this property. So is hard money worth it? You betcha. And what's great about both of our hard money lenders is they do not require monthly installments or monthly payments. Some do. It's not the end of the world, but for us, Our hard money lenders do not require any money from us until they take all their proceeds at the sale or the cash out refi of the property if we take it. For us, that's huge because we don't have to worry about having even extra cash to pay him interest throughout the month. We can just turn around and therefore pay them. The title company will cut them a check and they're good to go. So if you're not utilizing hard money, or if you're waiting to flip your first home because of financial constraints, yes, you need a little nest egg and a little reserve cash to maybe float depending on your lender, but don't let that be your reason for not getting started. Hard money can be one of the most crucial tools, and it's actually the easiest objection or hurdle to get over is the finance piece. Even if you don't have tons of money, the biggest myth with the easiest actually solution is the financial piece. The finding the deals, the construction, that actually is way more cumbersome than finding money. So I hope that helps you. I hope that you understand that, see it as an asset, see it as a tool. Don't see it as a burden. Don't see it as something that's a problem. See it as a accelerator to your business and utilize it to fast forward your company and your rehab even faster than what you could do with your own means. So I hope that helps. Check out the calculator below. Come back for more videos. See you guys then.